It's recording now.
Cool, but thank you so much for giving me a bit of your time today. That's great that we're going to talk together about options. I've got like plenty of stuff to talk about, so I think it's going to be an interesting talk. And yeah, I mean, do you have anything that you'd like to start with, maybe?
Um, I'm glad that you took the time as well. I guess I would start with just introductions, I guess. What do you do?
Yeah,
Where are you from? When
sure.
did you get
So
started? Yeah.
yeah, sure. So my name is JC. I'm based out in London, and I'm training options, and I have a channel, also a YouTube channel that I started, I think, a bit more than like around a year ago now. And I started basically documenting my whole journey with options. You know, I started documenting the trades that I was taking, the strategies, and I basically showed everything that I was doing, like the good stuff and the bad stuff. And I continued doing this, and I'm doing two videos a week or something, where I'm basically talking about strategies, trades I'm taking, stuff that I like to trade, basically.
I've been watching you since you had less than 1,000 subscribers,
Oh,
and I'm
really?
like, yeah. I'm like, oh, I hope this guy gets monetized. I hope he doesn't get discouraged because I remember your videos were like getting 30, 35 views at the beginning. I know that
Yeah,
could be discouraging at
it
first.
was. It
Yeah,
was. It
so
really was. But
it
I mean,
takes persistence. Yeah,
yeah, it's YouTube, I guess. Everyone starts
yeah,
the same way, like,
yeah,
except if you have a big push at the beginning. But yeah, I was getting like 30 views at the beginning.
yeah,
It was. But I guess like everyone.
yeah. I was there
And
when
so,
you first started.
so
Yeah,
what about you? How did you start your channel about options?
I
Because
started in 20. I had a parental leave. I went on parental leave when my son was born, so I had some extra time off at home. So I was watching a lot of YouTube already, and then it just came to mind, why not just share my own experience? I'm sure I have valuable experience I can share, especially seeing like videos that do well and they're not even that valuable, but they do so
for
well. But I guess it's more like, clickbait, or the way the video is presented. So I thought of starting a YouTube channel, just see if I can make money from it and share my experience, or share my knowledge with others. So I started in 2017, but I was really not consistent. But I started with like Questrade tutorials, and they were doing well actually. Like my first few videos on Questrade were doing well, and then I started doing more like channel. I felt like I didn't have a direction. I feel like I messed up my channel because I didn't have a direction at the beginning. I
mm,
wasn't consistent in the upload frequency or schedule. Like it's very important to be consistent, even if it's once a
yeah,
week or three times a week. It helps a lot to be consistent for some reason.
yeah,
Um, Whether it's four times a day like Meet Kevin, or three times a
for real,
week or once a week. Like there are channels that are very successful and they post once a week, and there are
exactly.
channels like Meet Kevin that they post four times a day. So there's but I think consistency is important. Whichever schedule you choose, consistency is important. So I didn't
Yeah,
have that. I think I'd be not uploading for like 3 months, and I wasn't sure which
yeah,
direction to take, like what kind of videos to make as well. Also, I felt like I wasn't focused on who my target audience was. Sometimes I'd make videos as if I'm speaking to beginners, but then sometimes
yeah,
I'd make videos as if I'm speaking to people that already know what they're doing, or have,
yeah.
experienced option sellers, for example. So I felt I was all over the place.
Yeah,
But
it's hard.
what,
It's hard to find a middle ground when,
yeah,
especially with options, because with options, I feel like it's either you can do very beginners content, but very often you want to go toward the most advanced stuff because that's where the real interesting part is,
interesting,
Except
exactly.
that you lose a lot of people on the way,
Yeah,
unfortunately, and
yeah,
and that's why I try to make it as I don't know, as easy to watch as possible, but it's hard because it's still, sometimes when you talk about like deltas and puts and calls, like, you lose people. Like you
yeah.
lose people because it's a lot of info at once. So have you always been trading options, even at the beginning of 2017 or even before?
I think I started options end of 2018.
Right.
I was doing, remember in December 2018 when there was like a small
Yeah.
correction? I
Yeah.
was doing covered calls. I started doing covered calls.
Right.
That,
Right.
that
Okay. Yeah.
I think everyone starts off with covered calls. Or actually,
Yeah.
everyone starts off buying calls. That's the first thing they do with options. And then in terms of selling, everyone starts off with covered calls. And I was enjoying it. I was actually doing pretty well because I was selling at the money calls. And I think, I guess because it was a bullish environment, my at the money calls were always like 100% profitable. But then I got burnt later on when the stock that I would buy would drop like 30%. So I
Mm,
buy a stock at 60, I'm selling a call option at 60, I collect $3, $4, very nice. But then the stock drops to like $35. What
yeah,
do I do now? I can't sell a 60 call, there's no premium. I can try to sell a 40 call, but then I risk losing my shares at 40, because the stock comes back up.
yeah,
So then I lose $20 on the shares, so
yeah. Yeah, that's a bit the thing with covered calls. I feel like it's a great strategy because like you have like a capped max loss, you have like all of those nice things. You're going to benefit from the up move and a slight down move, but you are going to benefit from a lot of situations, but you are very tied to the trade. It's a bit like a poor man's covered call. You're going to be time bound to the trade. You're going to have a lot of money at once that is invested with those 100 shares,
yeah.
and you have to stick with the trade for a long time. And as you say, if the stock falls like by 50%, I feel that is, I mean, personally, I'm going to be pissed because I'm going to have to stick with the trade for a long time and
Yeah.
hold my calls forever. And I don't like that. I
Yeah.
don't really trade cover calls. Like, I mean, I've traded a bit and I did some videos on it, but it's not something that I usually go for. Do you still do covered calls now, or have you switched to other things?
So in Canada, our registered accounts, we cannot do puts. We can't sell puts. So all we could do in a registered account in terms of option selling is covered calls. So in
Oh,
my registered accounts, I'll do covered calls, but I'll do it like on $20 or $30 stocks, or I'll do it as a way to replicate a naked put. So
yeah, okay.
let's say a stock is trading at $60 and normally I would sell, let's say, a 50 put and collect $2. So my break even is 48, right? So I could do the same thing by doing an in the money covered call. So I'd buy
Mm,
the stock at 60 and then I would sell the 50 call for $12.
yeah,
So that
okay.
that puts my break even at 48. So it's the same thing. So an in the money covered
Yeah,
call can be used to replicate an out of the money put. So I'll do that in my registered accounts. And if it's like a $20 stock, I'll do an at the money covered call to try to get the most premium out of it. And yeah, sometimes it works. Sometimes I just have to hold on to the stock a little bit longer. I just keep rolling the call. So let's say I do a 30 covered call, the stock drops to 25, then I'll sell a 30 call again for next month. I'll probably collect much less premium, but as long as my initial entry is decent, then eventually it comes back up, and then
yeah.
I get rid of my shares at the $30 price, and
I think it's always like a very big part. Like you can be wrong on a trade, but as long as your entry is somewhat fair,
yeah, yeah,
like it
exactly.
will probably come back in your favor. And that's something personally that I've learned. Not like, can you sell credit spreads still, or it's not at all like you can't do that in Canada?
Only in a margin account, in a non-registered
Only a
account,
margin account.
of course, yeah, we can do credit
Yeah.
spreads, yeah.
Yeah, you see, for example, I love credit spreads because it's like this strategy. If you have a somewhat fair strike price when you sold your credit spread, it is going to come back in your favor.
Most of the time,
Usually, if you
yeah,
don't, yeah, most of the time, if you don't trade like a crazy stock like AMC, JME,
yeah,
if you trade like a fairly liquid, healthy stock, usually it comes back in my favor. Like, for example, I looked at like the trades that I had to roll in the past and see how much time it needed to go back in profit. And usually 2-3 months is the timeline that I need for a trade to come back in my favor. So I was like
okay,
quite surprised that I needed to roll it 2 or 3 times, and then you will come back in my favor and make a profit. That's
but
usually what I have.
when you say roll it, do you roll it before it gets breached or after it's breached? Because after it's breached, you can't roll it anymore. You can't roll it for
You
a credit.
so it depends. It depends how far in the money. If it's like on in between, because usually
Yeah,
what I'm going to do with my credit spreads is that I'm going to sell the 30 delta and buy the 5 delta. So I'm going to have a very wide credit spreads, and that way I keep most of the premium on the short leg, and that allows me to still roll my credit spread for credit, even though it gets a bit in the money.
a
That
bit
that's the
in the
problem I
money.
feel.
Yeah.
Yeah, if they're too tight, the credit spreads, it's impossible to roll them for a credit. But that's why I make them very wide, so I still have the opportunity to roll it, even if it's a bit in the money. But usually I'm quite aggressive on my when I roll a trade. Like if it gets, for example, to like the 50 delta or 60 delta, I'll be
Okay.
rolling it to the next month directly.
Okay. So you manage pretty quickly.
Yeah, pretty quickly. Yeah, I don't like to, because otherwise, if I can't roll for a crate, I'm going to have to pay for my roll, and that's really not something I want to do. So I'd rather have it rolled, and even if it comes back in my favor, then be it. At least at least it came back in my favor, rather than rolling it too late.
Okay.
Because it's really a pain when we roll it too late, and then after that you have to pay for it a bit. I mean, it's really mad. Do you trade also credit spreads that way, or not at all?
So yeah, I do put the bulk of my trades. So you're not. I see you don't watch my videos now. So the bulk
So
of my
I watched your portfolio that you shared in with David, like in the
David,
you
yeah.
had quite a lot of trades actually on I've seen
So that's across 4 accounts. So that includes my
four
registered
accounts.
accounts. So that includes my registered accounts where I have covered calls. But in my non-registered account, I have actually let me open my trade log. In my margin account, I think actually my quest trade is open. In my margin account, I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I have 11 trades open right now in my margin account.
Okay.
But what were we saying? Yeah, so I do the bulk of my trades are naked puts, put spreads, and covered calls. So covered calls will be in my registered accounts.
Yeah.
And what I
Yeah.
what I like to do with put spreads though is I like to sell on red days. So I have a
Hmm.
watch list of stocks that I like to trade, and whenever they have like let's say Netflix has a 4% down day, then I'll do an out of the money put spread at expected move, 5 point wide, and I usually go for $1. If I can collect $1 at 5 point wide at expected move, plus I already waited for the stock to drop 4%, so I feel like I have a good entry, so that strike has a pretty good chance of winning at expiry if we don't go through something crazy. If it's just a regular market, it has a pretty good chance of winning.
Yeah.
And that's how I do put spreads, and I only do it if
Yeah.
I can't afford doing the trade naked, or if the stock's at
Yeah.
all-time highs, I don't feel comfortable doing a naked put, then I'll do a put spread. But then what I used to do before is I used to have to manage put spreads that are breached. I used to have a mechanical approach, which was to sell the corresponding call spread to reduce max loss. So if I have a 5 point wide spread, I
Yeah.
sell a 5 point wide call spread, same expiry, and therefore turning a put spread into an iron condor. And I'm just like reducing max loss because I can't lose on both sides.
Yeah.
But whenever I do that, I realized that I would end up losing on the call side.
Yeah. It would come back up
Yeah,
against on your yeah.
very
Yeah.
very often. So what I noticed is I'm better off not managing it, letting it play out, and most of the time it wins. And if anything, if I have to manage it, I'm better off rolling the put spread as a put spread as opposed to
Yeah.
selling a call spread. Because when I sell the call spread, I end up losing on the call spread, and that's what I've noticed that when I started logging my trades. When I went back, I noticed that I'm always losing on the call side, on the call spreads that I opened to mitigate a put spread that
Yeah.
was breached. So I stopped selling call spreads to mitigate, and I started rolling my put spreads. So obviously, if it's breached, I cannot roll for a credit. What I'll do instead is I'll either increase the width of the spread, so I'm adding more
Hmm.
risk to the
Yeah.
spread,
You're adding more. Yeah.
but I know that it just needs a bit more time and it'll come back up,
Yeah.
or I'll add a contract. So I'll turn one contract into two contracts, but I'll only do it if I can lower my strike. So I
Hmm.
won't keep the same strike. So I'll lower my strike, add a contract, but I'm also going further out in expiry. So I'm giving the trade also a lot of time to recover. And
Yeah.
I'll only do it if I'm confident that the stock is a type of stock that over time goes up.
Yeah, I mean, it's a bit like I saw that you had mentioned in the video that David put on his channel, like about the Amazon put spread that you saw. Amazon had a wild down move, like
But that's
the
earnings.
days.
When you play earnings, you anything's possible. So it's part of the risk of earnings.
Yeah, I mean, especially Amazon, tech companies in general, they have like wild earnings usually, like
Wired
they
earnings?
wild
Weird,
earnings.
weird.
Yeah, they
Okay.
tend to move like a lot more compared to, for example, like bank stocks.
Yeah, yeah, yeah.
Bank stocks usually don't move at all, like during
Yeah,
the
but
earnings.
there's no premiums in bank stocks.
Yeah, there is less premium. Obviously, it's
But
yeah, you have
tech stocks, you could go pretty far out and you could collect decent premiums. And most of the time, put spreads or naked puts usually win on tech stocks.
yeah,
But yeah, it's one of those. I'm not gonna say rare scenarios, but uh, it's one of it's I guess that 10 the 10 or 15% of the time where Amazon will drop outside of expected move.
Yeah.
But something like an Amazon put spread that's completely breached, that I would roll by adding another contract and giving it more time.
Yeah.
So
Yeah,
I
I mean,
like,
usually I agree. I think adding more risk when you roll, like it sounds bad on the
yeah,
paper,
it
but
is bad.
usually, it's
In this
pretty
market,
logical
it
because
works. Yeah.
yeah, because you sell a put spread in the first place and you have your the downside protected. And then once the down move happens, then technically, I mean, that it's probably going to come back up at some point. So it makes sense to roll and maybe increase the width of the strike because you know that you already protected thanks to the put that you bought before. So it's not that bad of a situation now if you increase, I think, the width of the strike. Like I would also be tempted to increase my risk just to be able to roll for a credit because I think it makes sense to do it once. But I think in the end it comes down to first of all trading small. So after that you can also increase
Yeah, yeah.
risk without putting too much risk on the trade. I
Starting
guess you also
small.
come. Yeah,
Yeah.
I mean Tastytrade way, I guess. Like how has Tastytrade helped you in your training? Because I know for me, I mean, I think they're doing an insane work. Like I don't know if you saw that they are releasing that look back platform, that back testing platform
I
that we're
heard,
going
yeah.
to be able to use. I
Back
mean,
testing.
that's mad. They are doing like an exceptional work. I'm so grateful that they are there.
Yeah, we don't have them yet in Canada, but they're coming soon.
Ah, yeah, true. You don't have Tastyworks.
No, we don't.
Oh my God, yeah, it's I mean at least the look back platform I heard that it was going to be available on the web. Like you can literally use
Okay.
it like from a web browser. You don't need Tastyworks to use it,
Okay.
which is
Okay.
pretty nice for Canadian citizens.
Yeah.
It's why isn't it
I
available
think
in
Canadian
Canada?
regulations are more complicated. And
Really?
so, yeah. And Tom, I think last thing Tom said was, I think Apex needs to get like approval for like the clearing firm needs to get approval to trade in Canada or to clear in Canada. So it's just a matter of Apex getting the required
Right.
approvals. It shouldn't. He said. I think he said like end of year. I think there's a video where he said in August, end of August. But I'm hoping if end of year, that would be amazing. What is it? December? Yeah. So about four
Yeah.
months. In 4 months.
Yeah, that I mean honestly, I think it's Thinkorswim is also a great platform. I think you have Thinkorswim in Canada.
We have Thinkorswim, but it's with TD, and TD's commissions are
Yeah.
too high.
Oh, really? Are they
Yeah.
higher than because in Europe we don't have Thinkorswim. By the way, I saw that you you had talked with Tom, no? Tom Sosno.
Yeah, I did a chat with Tom. Yeah, asked him a
Nice.
few questions.
How
Yeah,
did it go? Did you post it on video? I
watch
didn't
my
see the video.
video.
Damn, I didn't see it.
Go to my channel, click on videos, and you'll see a list of videos.
That's cool. That's nice. Honestly, he's really available like to talk
Yeah, no, he's amazing. Yeah,
that's
and
really cool.
I emailed him I emailed him a date to ask if I can chat with him. He responded like in 30 minutes and said yes.
Really
Like that's crazy.
cool.
Someone who's like for sure he's a multimillionaire. Like
Easy.
he's spending like I don't understand how he's like willing to answer people's emails for free, spend like chat with people for free. Like it's obvious it's a passion for him to talk about options. That's why like he enjoys it. So
Yeah,
he doesn't get bored talking about it, even if he's repeating himself, you know, every
yeah,
time. It's crazy. But I told him I think like that's probably the key to his success is how he provides so much value up front without expecting anything in return.
yeah.
And
Yeah, I
and
mean,
and that's why
the
he's so
look back
successful.
the look back platform that they're releasing now. When I had programmed a bit of a backtester to backtest options, and I had programmed that thing, but the big problem was that the data was super expensive. And for example, I had
Okay.
bought like 1 month of data on the SPY
Mm-hmm.
for like not all the strikes but a decent amount of strikes, and I had bought that historical data for just 1 month. It had cost me already $100 for just the SPY for just 1 month.
But there's
and
a yeah. Go ahead.
and that's why when I saw that they were releasing it for like 15 years historical data for all the stocks, I mean, the amount of money that they have spent in that platform, not even taking into account all the development costs and all the people working and everything. I mean, that's at least I think 1 million, $2 million just spent in that platform that they give for free. That's mad, honestly.
Well, it's good. It's good promotion so that you use their broker
Yeah, I mean,
after.
honestly, I
But yeah,
think
it's
when
still
someone gives
amazing. Yeah,
out that much value, the fact that they win, it's fair. I'm happy that they win. I'm
exactly.
like, that's nice. They absolutely deserve it. Like, do you trade the tasty trade way, like exactly, or what adjustments have you made compared
Yeah,
to the
I'll answer
normal
that
tasty
question, but
trade way?
I'll answer that question. I just wanted to add to your note though. There is a website called eDelta Pro where you can back
Yeah,
test, but you have to pay
yeah,
for it, like $100 a
exactly,
month. Yeah, but it has
exactly.
everything. But yeah, so Tasty Trade, I do not, I do not trade the Tasty Trade way. I watch all their videos though, but I don't trade the Tasty Trade way. Like I said, I do more. I'll wait for red days and I'll sell out of the money puts, whether it's a naked put or a put spread. Uh, I I don't necessarily close at 50%. Sometimes I'll close if I like the profit. If I make like $1 profit in like one day, even if it's not 50%, I'll take it. And in terms of managing or rolling the trade when there's 21 days remaining because of gamma, I don't see that an issue. I mean, I don't mind because I like to roll when there's no more extrinsic value. If I have a naked put, I'll roll a naked put if I have no more extrinsic value in the option. I don't
Mm,
necessarily care if it has less than 21 days and if the stock, like, just because the option value can move a lot just with every movement of the stock, it doesn't matter to me because I'm gonna roll anyways, and I'm gonna roll for the extrinsic value of the new option, which is going to be the same thing. So I don't necessarily follow the 21 day the tasty trade mechanics. Um, and like they say, if IV is low, then you should close the trade and open a new trade, which makes sense because you want to put your capital somewhere else. But that's assuming that you're using all your capital. When you're
mm,
selling options, you have at least 50% available. So I don't mind holding a spread, rolling a spread that has low IV just to save it, just to avoid confirming a loss. You know, like the reasoning behind if it has low IV, then close it is because it's not capital efficient to sell something that has low IV. It's better to use that capital towards something that has high IV. But sometimes you're confirming a loss and you don't know if the new trade that you're going to open is going to be a winner or not.
yeah,
So I'd rather save a trade even if it has low IV. You know
yeah,
what I mean? So
yeah,
not
yeah,
everything. I don't like all the tasty trade mechanics, but what I do like is I like watching their videos and just all the back testing that they've done, the research that they've done. Like I
sure,
like their older videos. I like Mike and his whiteboard. I don't know if you've
yeah,
watched his videos.
yeah.
They're pretty useful. But
There is also, but there is also some shows where I'm like, this is not at all the tested trade way per se. For example, Jim, Dr. Jim, like how he breaks down the options and everything. Like I had watched some videos about his trades, and he says, for example, on the spot that he has a $30,000 portfolio, and he has at least 12 positions on with at least strangles on big stocks, like high value stocks. And I'm like, for sure that the buying power required for all those trades,
he's over
or at
50.
least, yeah, at least over 50. Like I can't see how it's under 50.
And
And
even yeah, and even tasty trade, exactly like you mentioned. I don't think Tom trades a tasty trade way either. He deviates a lot, and yeah, so
yeah,
it's
but
it's
I
just
think this is,
it's
sorry.
good to understand, but I think you're gonna develop your own strategy, your own approach, your own management style from trading.
A hundred
Yeah,
percent, 100%. That's something that I learned really is that it's a good base. It's an amazing like base. Like when you go from zero, learning at least the test trade way and the mechanics and everything can only be good because you start from zero. But after that, you start developing. I think trading is a skill. It's really like a skill. You start making it your own. You start
yeah,
liking some stuff, like you say, selling puts on red days, and absolutely agree with that. I think if you can sell a put on a red day, it's better to do this rather than selling a put on a green day because at least you have a better strike when you sell
absolutely.
it.
Yeah,
So
yeah,
why not doing it?
yeah.
And you start doing this type of things, and that's where I think like where personally I had like a huge growth in terms of trading is that I see it more as a skill, and after that, once you have learned some good basics, you make it really your own, and you start adapting it to whatever you like really, and
Exactly.
that's where it becomes really enjoyable.
I think the important thing is to understand how options work, like the
Yeah,
definition of a put option, the definition of a call option, what in the money means, what out of the money means, the consequence at expiry if an option is in the money. As long as you understand these terms, you could do
yeah,
whatever you want almost, as long as you know the consequence of what you're doing. I
Yeah,
think you could do
absolutely.
any strategy you want.
Yeah, absolutely. And sometimes when I see, for example, like there are plenty of people that like to buy options and they're going to really go for those, quick wins. That they're going to
Yeah,
day trade options by buying calls, buying
yeah,
puts. And I
yeah.
don't think there's anything wrong, but
No, there's
if they
nothing
make
wrong.
money, fair enough, But the thing is, usually I think it's better, for example, to understand, as you say, really how options work. And if you sell a put, as long as it stays above, for example, your strike price, then you're going to be good at expiration. Otherwise, you get a sign. What does it mean? As you say, I think understanding the fundamentals really help in terms of understanding options and playing with the mechanics and being really at ease. Because at first, when I was starting to trade options, I would, for example, trade the Tastytrade way, or what I think was a good way or something. But I would not understand fully the mechanics and the fundamentals of options. It takes some time to fully grasp the concept of options and the mechanics behind it, and how to roll a trade, and what does it do when you roll a trade, the impact on implied volatility, all of these type of things. It takes a while to grasp, and I think sometimes people should maybe go less directly in the markets. They should maybe spend more time studying, so they don't lose money on the long term, after that.
Yeah, I've learned a lot from Option Alpha. Have you
Yeah.
watched Option Alpha videos? I
Yeah,
think he was the
I think,
first.
yeah, same. The first one, when I started, he has like, he did those free courses on his website.
Yeah.
I think they are on top of being a brilliant marketing tool. I think they are also very, very educational, and that's a really good work that he's doing. The thing I think with Option Alpha is that there is no personalization, other than he's basically doing the same thing as Tastytrade does. There is no. I would have loved to see
His
Kirk's
point of
personal
view.
point of view. Yeah,
Yeah.
his portfolio, like what has he learned trading options, because it can't be just as it is. Because I had subscribed to his premium
Oh
alert
yeah.
service.
Oh man.
Yeah, I wanted to see, I
You
wanted to see the
received his
trades that.
trades. You received his alerts.
Yeah. You would
Okay.
receive trades and email alerts and everything, but it's very. I mean, I
What?
tried. I
What were
didn't.
his trades?
But like, it would be, for example, like selling a put spread on GLD, or regular
Okay.
trades, like mostly vertical spreads, sometimes strangles, but a lot of rolls usually. I mean, fair enough, rolls happened, but I wouldn't personally. I didn't make money like following his alerts back in the days. After that, it might also be a bad period, bad performance. It happens.
How long
But
have you been
I think
selling? How long have you been selling options?
so. 2019 was when I started.
Oh, okay, okay. So same.
And yeah, and but yeah, I missed a bit of like that personalization that you get after a while when you trade options. When you sell options after several, some months, years, whatever it is, you start, as we say, acquiring a certain personality in selling options. And that's what I didn't see in his service. And I was like, that's a bit too bad, because you might as well just look on Tastyworks, and you're going to have alerts from the trade page. So you might as well do that, and not pay
But
for
see, it's
someone.
good that you mentioned that. But see, when I look at Tasty Trades, the follow me stuff there, follow me
Hmm.
trades, I never took a trade from their
Yeah.
suggestions. They don't. I don't. First of all, I don't think they put the best trades because they don't put all their trades. They choose which ones they can share.
Oh, really?
Yeah, I don't. I've never seen a trade that I liked, and most of the trades are Tom like really. He does a lot of strangles, and it's mostly Tom uh, managing his strangles. He
Yeah.
bringing like
Yeah.
a delta neutralizing, and sometimes most of the time he's inverted. Like here,
Yeah.
he's got square. He today he went from he closed a 250. Sorry, he closed a 250. He closed a 250 put and rolled it to a 260 put for September on Square. So Square
Yeah.
is at 280 right now. So he just rolled up his Square from put from 250 to 260. That
But
doesn't
you see,
help
I'm
me at
wondering.
all.
Yeah, that doesn't help.
You
No,
know?
that's for sure. Like,
Yeah.
that's not a good example, and I think that's important that they put like it's a role or something, because someone who would like start with options and they try to place a trade and they see that role on
Yeah.
Square, they'd be like, what do I do with that? I'm
Yeah.
wondering, because you said that they are choosing the trades. I'm wondering if every trade that they take through account goes into the follow page, or only that they choose
Only the
certain
ones that
ones?
they
Like,
choose. Only the ones that
oh,
they choose.
that's a fact.
Yeah,
You
yeah,
know
it's
it.
a fact. Yeah, yeah, yeah.
Okay.
Plus, Tom
Okay.
does like over 80 trades, so you
Yeah.
don't see 80 trades there.
Yeah. True. Fair enough.
But
Yeah.
he
I
does,
had.
it's not
Oh yeah. But
everything.
actually, I had watched, now that you said this. Actually, I've watched like the interview that you did with Tom, and he said that he had done 116 trades. Like
Yeah, something
they
like that. Yeah.
yeah, I was like 116 trades. I can't even like understand how is that possible. But yeah, I
Yeah.
remember now.
He's
Now
not
I remember
stressed. He's
actually.
not stressed.
Yeah, I mean, I guess when you have his account, and in general you are in his position, you're not stressed about like two balls anymore. It's
and
not.
and most of the time his strangles are inverted.
Yeah,
He's really just collecting credit. He's really just
yeah.
collecting credit. What's your go-to strategy right now
Uh,
after everything you've been through and experienced? What would you say is your go-to strategy right now?
I think wide credit spreads.
Wide credit spreads?
Yeah, I think wide credit spreads for a portfolio
Any
and to
side,
maintain
like call or put?
both,
Anything?
honestly.
Okay.
Both, and I'm going to sell wide put credit spreads when the stock is at the low end of its trading range for the month or 2 month. And I'm going to do the opposite for the cold credit spreads. I'm going to sell cold credit spreads when the stock is at the higher end of its trading range. And of course, that is very subjective as a criteria. What is low, what is high in terms of monthly range, but you can look at what is the monthly range and base a decision on that. But that's my way of doing things. That's how I love to maintain my portfolio. I'm going to have usually around 7 trades on, and or 7 8, and I'm going to try to stay delta neutral, so like around 4 put credit spreads, 4 call credit spreads, and both sides are going to be wide in terms of credit spreads. I'm going to usually buy the 5 delta for the long leg, and that's because I want to be able to still roll my trade for credit. That allows me to keep most of the premium, and that protects me against a crash.
You always start off with one contract?
Yeah, I might go for two contracts, usually 2 or 3 contracts, depending on how expensive is the stock. Because, for example, if I see that I really don't need a lot of buying power for a certain stock, and usually I aim for a certain buying power per trade, I'm going to sell a bit more contracts to arrive at that threshold where I'm like, okay, now I have a good trade where I'm going to make a good profit, and it doesn't require as a lot of buying power.
And do you ever notice, because you said you sell a wide spread, like how wide is a spread? Like how many
So I'm
points,
So, for example,
depending on the
but
underlying, yeah.
so if we were so it depends, because, for example, if we were talking about Amazon, I'm not going to choose stocks that are super expensive, because if you sell a wide put credit spread on Amazon, you're going to have like, I don't know, $30,000 of buying power or something. I'm going to go for like $30, $50 stocks, somewhere around this, mid market stocks,
Yeah.
basically. Like, I have a watch list, and if I give you some
So what's
names,
one trade? What's one trade that you have on right now?
one trade that I have on is, for example, a call credit spread on Dropbox. I've sold 2 contracts. The short strike is the 32 strike, and the long leg is at the 36 strike.
So 4 point wide. And how much did you collect on that?
I collected $1. $1, yeah.
1/4. Okay, that's pretty good. Let me just see what the stock is trading at. It's DBX
DBX, yeah.
31. Isn't that a little bit close?
No, it's fine. Like, it went a bit against me now. Like, it's a trade
Okay.
that I've been putting on like before, and now it goes against me. Like, it went against me. I think I had sold it when the stock was around like I don't know. I think it was around $30 something, and then it started going a bit against me. But you see, it's the type of trade where I really don't mind if the trade goes against me. I mean,
Why?
because I'm just going to roll it for the next month, and I'm almost sure that by the next month, it's going to come back in my favor, and I'm going to be able to close it for a 50% profit or a bit less.
Okay. What about a trade on the put side?
A trade on the put side, for example,
Yeah.
Let me take, for example, I don't know which one should I take. Let's say Gap GPS. I've sold a put credit spread on GPS. My short strike is 27. My long strike is 20.
Okay, so that's $700 capital requirement, right?
Yeah, yeah.
27. Now, you're using Tastyworks.
Yeah.
Okay, it's a 30% with question. It's a 30% margin requirement stock. Because sometimes you're better off just doing naked in terms of capital
Yeah.
requirement.
Yes, in terms of capital requirements, sometimes I'm better off doing just go naked. I would like actually need less capital
Yeah.
requirement, but the problem is I'm always thinking about the worst case scenario possible, and I'm always thinking, what if the stocks tomorrow, falls to,
So
let's
you're
say, I don't
buying
know,
that
$14.
long put for protection then.
Always, yeah. The thing is, sometimes I see that by buying that long leg,
Yeah.
I'm actually increasing my buying power requirements. But I'd
Yeah.
rather do this rather than have a lower capital requirement but be exposed to a potential
But
crash.
why are you choosing these stocks? Like why Gap and why Dropbox?
So usually there are a mix of. So I have a watch list with this type of stocks. They're full of liquidity. They also have decent implied volatility, making options quite expensive relative to the stock price. If you look at, for example, stocks like Alcoa, FCX, United States Steel Corporation,
Oh yeah.
Dropbox, Gap. I mean, those stocks have very good implied volatility, so you can really make a decent return when you trade options on those stocks. And that's why I like them, because they're liquid, they have good premiums, and that's why I sell wide credit spreads on them, because I'm taking the best of both worlds. Like, of course, I have risk. There's always risk, but I'd rather trade wide credit spreads on these stocks and actually make a good return on my money rather than on a stock where I make less money, like a bank stock, for example.
So okay. So do you play earnings? Because I heard you
Yeah,
said you do strangles for earnings.
yeah. The
So
earnings are my best
so we
favorite
have
part.
we have Baba and what's the other one? And Take Two Interactive. Did you play it
All
today?
right. No, I didn't. I usually stick to my watch list of. I have a watch list of stocks where I
Okay.
usually stick to. I don't like to trade BABA because it's a bit too volatile for me during earnings.
Okay.
So basically, I use that website called optionslam.com.
Yeah.
And, by inputting a stock on that website, you're going to have a ranking, and it's called the EVR. And they basically look at all the past historical earnings, and they
Yeah.
look at the volatility, and basically they rank it in a way where it tells you how volatile is the stock during its earnings. And I find it very, very handy because, if you sell a strangle, I obviously want the stock to stay within my range, and that puts myself in the best possible way of training a stock that is not really volatile during earnings. And that's why, for example, I like bank stocks. I might make less money because they have lower premiums, but I know they're very not volatile. So I'm fine taking a risk on that stock, for example.
And okay. So what are you playing this week in terms of earnings?
So this week I'm looking at. So let me take my wait.
So we've
What do we?
got yeah, we've got Take Two Interactive, Baba. You said no. There's Corsair. Are you playing Corsair?
I'm going to trade Activision, General
Act-
Motors,
okay.
CVS,
Okay.
also, and EA, Electronic Arts.
Oh, do they have earnings this week? Okay, that's good. I didn't
Yeah,
know that.
Electronic Arts on the 4th after market close.
Okay, I might do that as well. So, how will you play Activision?
So Activision, if I was like placing a trade right now, I would sell the 80 puts, and I would buy, I think I would sell the 87 call. Sorry, not buy. I would sell the strangle 80, 87.
80,
How?
87
Yeah,
for this
I
week?
think for this week, yeah.
That's pretty close. Okay, so
Yeah,
80 gets you about 93 cents right now for
yeah,
the put, and then 87 about the same thing. Okay, so about you'd
yeah,
get about $2.
yeah.
I feel like
Yeah, it's close.
yeah, it's
Yeah,
not
yeah, yeah.
safe enough for earnings. I feel like it can get breached. Like the expected move. So how do you get expected move of a stock?
So on Tastyworks.
Yeah, sure, on Tastyworks, yeah.
So, for example, it's like written with blue
Okay.
dashed lines. So it's very easy to see the.
So are you able to tell me what the expected move for Activision
Yeah, so
is for this
the
week?
expected move is between 79 and 95.
Mm, 79, so 4 points lower,
Yeah,
and
and
95.
95.
So it's
Yeah,
higher on the call side. Shouldn't it be the same?
but because I guess it's skewed. There is a implied volatility skew. So I guess
Okay.
like
The
there's
calls
a different
are more
expected.
expensive.
Yeah, yeah. So that's why, because it
Interesting.
also fell. it also fell, so there is a skew probably.
Okay,
Yeah,
yeah.
there is definitely is.
So yeah, I'm getting a $4 4 point expected move. So 79 put would make more sense to me. But what is it
Yeah, after
trading
that,
for?
you know, for sure that like it's close, and the trade that I would put on right now, it would be riskier. But at the same time, when earnings are there, that's really where I consider like this is my moments, my time to shine. You know, this is where I want to sell the short strangle and try to take advantage the most of the implied volatility. And usually, honestly, like even by selling like the 25 delta strangles, I don't get breached that often,
What do
just
you
thanks to the Ivy Crush.
what do you do if you get breached?
So it depends. It depends. If I'm really badly breached, I'm going to roll it, and I'm going to hopefully it's going to hopefully come back in my favor. If it's a very small loss, like a very like I don't know, like a $20 loss or something, I'm usually going to take off the trade and move on. But
How do you roll it? Do you
so I'm
keep the
going to
same
just
strikes?
yeah. So either I'm going to try to widen my strikes because I'm
Okay.
selling a short strangle, so it allows me to collect more credit when I roll it. So it's an opportunity to try to delta neutralize it. But yeah, and I'm going to roll to the next expiration.
Okay. So you can
How do
change
you
the
trade
strikes
earn?
if you have to.
Yeah, how do you trade
I
earnings?
trade earnings by selling. I always sell the put side. I don't do the call side ever. After
Ever?
after seeing a few stocks fly after earnings, and like I don't know if you remember Zoom
Oh yeah,
last
I've been
year.
burned by this.
It went from 300 to
September.
450 once after
Yeah,
earnings, and there's other stocks that did that as well.
I got burned so bad on Zoom that day.
Yeah,
That was August 31st.
yeah. So for earnings, I don't do calls ever. So I just do the put side. So I'll sell a naked put, an out of the money naked put, or put spread if I can't afford it, or if I'm really afraid on the put side, I'll start off with a put spread.
Okay.
And most of the time, put side wins. And if I don't win, then I'll have to roll it. So for example, I have had an earnings trade on Spotify that I did not last earnings, but the earnings before. The stock was trading at 290. I sold a 260 put for $1. So this is one of those really rare cases where puts lose, but the stock dropped below 260. Uh, I had collected $1 and it dropped below 60, so I had to roll it. And I'm still rolling the trade. I still have it, but I rolled it to like I think I have it until August, and I've got the 240 put. So what's great about naked put is that you can roll the strikes lower as well. You know, you give up some credit, but you can still roll lower for a credit. So I
Yeah.
rolled it all the way to 240. I've got a total net credit of $7.70. In June, end of June, I had an opportunity to close it actually for $4.50. So I could have made like a $3 profit. I got greedy. I wanted the full $7, so I held on to it, and now I regret it because Spotify I think dropped to 225.
Mm-hmm.
And then so yeah, so that's the thing. So if they lose, I just keep rolling it, but I make sure that I can afford rolling it. If I can't
Yeah.
afford rolling a naked put, then I won't take the trade. I had a trade on Zoom, for example. Last earnings on Zoom, it was trading for like 330. I sold the 300 put for $4. Okay, so I collected $4, and I
Yeah.
only enter the trade if I know that I can afford rolling it in case it's breached. Zoom actually dropped after earnings, but dropped like 5 points. But the volatility crush allowed me to close my put for 50 cents. So from
Nice.
in one day, it went from $4 to 50 cents. So a $3.50 profit in one day just with earnings.
Yeah.
So that's how I like to play earnings, with naked put or put spread.
Okay.
So
Yeah,
although
it
put
makes
spread,
sense.
yeah,
Yeah.
and I use a website called I used to use a website called Earning Stats. It doesn't
Okay.
have all the stocks, but it shows you like the past performance for particular stocks, and it always shows you the expected move and the actual move. And I've noticed
Mm.
that any most of the stocks I look at, I've noticed that uh, first of all, they go up more times than they go down after earnings. So let's say
Okay.
60% of the time they'll go up, 40% of the time they'll go down.
Interesting.
And when they go down, most of the time they'll stay within the expected move.
Okay.
And it's like only a few select times where they're actually outside of expected move in terms of the downside. So that's
Interesting.
why I find that statistically speaking, out of the money puts out of the money puts at expected move for earnings wins most of the time.
Yeah.
And if it doesn't win, then either you take the loss, knowing that in the long run you should win, or you try to manage it and save it so that you don't confirm the loss. So that's
Yeah.
how I would play earnings. And what's great about earnings, what I like about earnings is that in a, let's say you're in a market crash, where VIX is at like 50 or 80, you could still play earnings, a 1 day trade where you're not involved in the general market. You enter the trade
Yeah.
like 15 minutes before the close and you close the next day. Because even in times of earnings, even in crashes, a stock can go up after earnings, or even
Yeah.
if it
Yeah.
drops, it won't drop more than the expected move, because the expected move is going to be super high because VIX is at 80.
Yeah.
So it's like
Yeah.
like I find earnings is amazing. Even it's like a great strategy if you want to play, like if you want to if you want a strategy that works during market crashes, where
Yeah.
you're always in cash basically, and you just enter a trade before earnings and close it the next day.
Yeah, I agree. I think, at first when I started trading options, I was very heavy into selling strangles. I thought it was the most amazing strategy ever,
The
and obviously
concept,
because
the
yeah,
concept
the
is
concept is
amazing. Yeah.
amazing. I mean, when you come from a world, I mean, I don't know if you had traded like
I
more
was swing trading before.
Okay, yeah, okay. So we know this stuff. So when you come from a world like this where you only buy or sell, and so you're only either long or short, and then you come to a world where you can basically sell and strangle and be neutral,
and
well,
don't
it's
care and
amazing,
don't care what the stock does. Yeah.
It's amazing. And at
Yeah.
first I was very heavy into strangles, and then I realized that the risk that I was taking was actually quite. I mean, in my opinion, it's not worth it. Sometimes it's not worth selling a strangle because, as you said, like you often get breached on the cold side. It's often a pain, honestly, and I just don't like it being exposed that much like on the markets. And for example, there was a nice study that Tastytrade did where they looked at a portfolio of $25,000. They were selling 5 strangles on that account, or I don't know if it was a 50 grand portfolio. It was a 50 grand portfolio, and they were using 50% of that buying power, so 25 grand, 5 strangles out of for 5,000 buying power each. And they showed that in a crash of 2020, it would have been down like around probably 25%, 30% of the accounts, just with 5 strangles. And when you see that, I mean, it's a lot of risk. And that's why I agree with you that with earnings, at least you're only there for less than a day, And
Yeah.
that's why I
30
love
minutes. Yeah.
earnings.
Yeah.
Yeah, it's amazing because honestly, like not 95%, I'd say between 90% of the time and 85% of the time I last around 30 minutes between, the moment I open my trade and the moment I close my trade. And it's amazing to not be
Yeah.
exposed with naked options like this.
Yeah, exactly. Yeah. That's why I like it. So you were selling options before March 2020.
Yeah, so I got very lucky for 2020. I wasn't in there as bad as I should have been.
That's what
I
everyone
was
tells.
very
Whenever I ask someone, they tell me, "Oh, I got lucky. I sold everything. I wasn't trading, or I started after March." I want to know what someone did in March. No one is able to give me.
I honestly, I won't be the right person because I didn't get burned too bad, and it's
Okay.
not because I'm that good or I'm excellent or whatever. Because I really genuinely got lucky. I decreased my buying power usage prior to the crash, and it just happened 2 weeks after.
What was it like? Do you remember a trade that you had open before the crash and you had to?
Yeah, it was like some SPC trades that I had, but the reason why I freaked out actually 2 weeks before the crash is that I was in India for a wedding in mid-February 2020. So really when the whole world started like, understanding that it was going to be a big deal. And I almost got blocked actually in India, I
Oh,
knew in New Delhi. And with all the travel restrictions, and literally the night before leaving, I could see all the countries start close the borders in the hotel room. And I was like, I'm not going to be able to go back to London tomorrow, if it continues like this. And because I was freaking out so much, I was like, something bad is going to happen. Like we're going toward like some dark things. I just decreased my buying power usage in case, and I just got lucky because there has been no crash after. So, and in a way, it's a bit unfortunate that I wasn't in there like fully because I didn't experience really how my portfolio would have done with such a big move. So in a way, I'm a bit pissed that I wasn't really in there, because I would have wanted to see the volatility in terms of portfolio value and how I would have gotten out of it. But I wasn't. So yeah, how did it go for you?
Uh, not good one. So I I didn't change anything going in like in February, even if we heard about it and everything, because it seems like we heard about it back in November 2019 and nothing happened to the market. Market was still going up. So my assumption was that it wasn't going to affect the market. So I
Okay,
felt like I was played because it affected the market like really quickly in three
big
weeks.
time. Yeah, yeah, it was
But
mad.
people knew about it a while back and nothing happened to the market. So the timing of when it affected the market is what bothered me. It felt like manipulation to me, regardless. So going into February, my strategy was selling put spreads like on a weekly basis. In fact, I was selling SPY put spreads. Was doing actually at that time I was doing three contracts. I was doing 5 point wide SPY put spreads every Monday, Wednesday, Friday. So SPY has three expiries, right? A week. So every Monday I would sell a put spread with the expiry of like 28 days later. Okay.
Okay,
And then
okay,
Wednesday I would sell another SPY put spread with expiry of 28 days later. So from Monday to Monday, from Wednesday
right.
to Wednesday, with 4 weeks apart. So that's a
So
strategy.
you would accumulate a lot of positions, no?
Exactly. But the idea
Yeah,
behind it is I'm laddering into the market. So as the market drops, yes, my first
yeah,
put spread is not doing well, but my next put spread it has a better chance of winning because
yeah.
it's the market has dropped.
You're averaging down in a way.
Exactly. And guess what? As the market's dropping, VIX is higher, premiums are higher. So my new put spread has an even stronger chance of winning because my short strike is further because expected move is
Yeah,
higher and I'm collecting more premiums. Uh, and and then if the market continues down, well, then the next one is also going to be better. So it's bad for the existing one. If the market is flat, well, then it's great. I'm winning on all of them. If the market goes up, well, it's great. I'm winning on all
yeah,
of them. So it's good in two scenarios if the market is flat or is going up. And if the market is going down, it's not that bad because yes, I'll have one put spread that's in trouble, but the other ones are getting stronger and
yeah,
stronger. Uh,
yeah.
Plus, I can manage the existing put spread, the initial put spread that I sold that is breached probably. I can manage it with a call spread, like I mentioned earlier,
Mm-hmm.
and that call spread is actually going to have more premiums because the market has dropped, so VIX is higher. So the call spread that I'm going to be using to mitigate my breach put spread is worth more. So it's sort
Yeah,
of like I was looking for a passive way of selling options, a mechanical way, just to keep it simple. So that's why I was doing like every Monday, Wednesday, Friday, and just laddering into the general market movement and to take advantage of all the movements of the SPY. Plus, I had done a back test. I have a video on it, but I'd done a back test where like 80% of the time, an out of the money put credit spread will win 28 days later. Or if you even want to look at a different stat, like 67 or 68% of the time, if you look at SPY a given day, 28 days later, it is trading above at that price or higher. There's there's a 68% chance that it's trading at that price or higher 28
mm.
days later. So there's an edge, there's an edge to the stock
I
being
mean, yeah,
going up.
the the market grinds up. Like the market
Exactly,
grinds up.
exactly.
Like I
So
mean, we
imagine
yeah,
exactly. So imagine an out of the money put spread. It gives you an even better chance of winning. And what's great is that as stock drops, VIX goes up. So your short strike is like even further away. So it could be like 10% lower. So it even has a better chance. So that's the strategy that I had going in. But I wasn't even disciplined about it. Because SPY, if you watch the market in March, the same day SPY went from like 310 to
yeah,
305. So the mistake that I did is I didn't stick to my schedule of Monday, Wednesday, Friday. On the same day, I would sell a new SPY put spread because I saw it as an opportunity because it
yeah,
just dropped so much. So I would enter another trade. I didn't. So on Monday, for example, I would have two trades that I opened, so three contracts, and then the next day, SPY drops even more, so I'd
yeah,
sell another one, and then on
yeah,
Wednesday, the problem is I ended up accumulating way too many spreads, and I wasn't sticking to my schedule, and I had three contracts, so it got stressful.
yeah.
I was selling call spreads against them, so I made a lot, like I profited from the call spreads, but
At
obviously,
least you
so
reduced your a bit your
I
loss.
reduced my max loss, but the put spread. Some of the put spreads were complete losers, and then the stress got to me. I had like 2 sleepless nights, and then
Really.
after that, yeah, after because I was also worried about getting assigned early because I had like
Mm,
I don't know, I had like maybe 10 short strikes on the SPY and they were like
yeah,
completely breached, right? So I had like a delta of 98,
yeah,
so I
yeah.
didn't they weren't expiring yet, but they had a delta of 98 because the stock had dropped so much. So I was worried that I would get a sign, and then if I would get a sign, then my account will get blocked. Even though it's a spread, even though it's part of a spread, I have a max loss, but I could still get a sign on the short
Of
strike.
course.
It would be so messy to handle it.
Yeah,
So that stressed me out. I ended up closing a lot of them for a loss. And then I had covered calls that were down like 30% as well. So I closed that as well. I just ended up just cleaning everything and just starting from scratch, just
yeah.
for stress purposes. I think I
Yeah,
took
no, but
like
honestly fair. Like that was, I tried to after the when the crash happened, and I tried to time the market. Very bad idea, and I was sure that we would
you bought
continue.
leaps.
Yeah, basically I started shorting again the market when we started coming back up,
Okay,
because
okay.
it went back up so quickly. In
Yeah,
my mind, I was like, it can't go back. We
yeah,
can't go back. Like the world is not
exactly.
the same place anymore. It is going to go down. And I started shorting so many concrete spreads, and I was like so heavy on the short side, and I was, it became about ego at some point. I was like,
Yeah, I
I
have to be
want to be
right.
right, and I got burned, and at some point I had to take my losses. So funny enough, I didn't lose in the crash, but I lost actually on
After
the
the
way back
crash,
up.
yeah.
So at some point when I started switching, and I was like, okay, now I'm just going to sell more puts, and I'm going to change a bit my strategy and not be that stubborn. It went
Yeah.
better.
So it's good that you mentioned timing the market. That's why I don't try to sell calls. I don't try to time the market because most of the time we go up, right? There
Yeah,
are I admit that 10% of the time it will drop, but I'd rather try to roll a put than to try to time the market and be wrong on the
yeah.
call side. You know what I mean?
Yeah, yeah.
Uh,
After that, like, I think when it comes to, I think you're absolutely right. Like, I don't even try to guess direction, honestly. Like, of course, when I see that the stock is at the low end of its trading range, I'm eager to sell a put because that's where I felt comfortable. But I know that deep down, this is not going to be like, this is not an ultimate strategy where because you sell the put at the low end of monthly trading range is going to do something crazy. It's just about having a better strike in case the stock falls.
a
That's
small
basically
edge, a
it.
small edge.
Yeah, that's basically what I'm trying to get. But I know that realistically, it is not going to be like. You can't time the market. Like
Yeah.
you can't.
So that's why not just sell the puts, which will win 90% of the time or 80% of the time, and then just deal with them the 20% of the time or the 10% of the time,
Yeah.
just manage them and just make sure that you have enough buying power to roll them. But that's if you're doing naked puts, yeah.
Yeah, but you see, it's something I agree with you a lot. Like my call create spreads tend to get tested and tend to get breached a lot more often, obviously, compared to my put sites. But by rolling them to the next month or the next month or the next month, they usually come back in profit at some point. So I
Okay.
found that by staying delta neutral was actually better for me because yes, I might get breached more often on the call side and have an unrealized loss, a bigger unrealized loss on the short term. But on the long term, when they come back in my favor, that makes me benefit from both sides of the markets and not just be long delta. And that's why I like to also sell call credit spreads because I'm just taking advantage of both sides. But I agree that on the short term, it's a pain because very often my call credit spreads are being breached, and I'm just wondering why I don't just sell put credit spreads and I'm done with it. But I'm forcing myself to still also sell call credit spreads.
Do you do you live off options or do you work full
No,
time?
no, no.
You
Yeah,
work.
I work.
Okay.
Yeah, I work full time. No, I don't leave off options. Like, I
Is that
think
a
I would need
goal
like,
or
uh,
you think it's
I would.
possible?
I think it's
It's
possible,
just a matter of
but
capital?
yes, yes, it's a matter of
Okay.
capital,
How
and
much capital do you think is required for someone to live off options?
I think for someone to leave off options, considering that he doesn't have a crazy lifestyle or anything like this, I think at least 300, 400,000. At
Okay.
least, I think. What do you think?
Yeah, I would say 300 comfortably,
Yeah,
comfortably
yeah,
300 to give room because you're not going to be using all the 300. You're going to be using like
of course.
100, 150 max.
Yeah,
So you need to leave
but taking into
150 of it.
account like a return of let's say 2% a month, like let's say 2% a month on a 300 grand account, that's around 6 grand per month. You take out you I mean, considering that you are consistently making 2%, which is highly unlikely. That's why
Average. It's a 2%
yeah,
average. I think
yeah,
2% average is good.
yeah, definitely it's definitely good. But that's why I think usually people underestimate the amount of capital that they need so as to actually leave off options, or at least trading in general. You need
Yeah.
to have honestly a ton of capital to leave off options, and that's the thing that I'm missing, the capital.
Okay, but you do believe it's a good strategy. It's possible. Better than
Yeah,
dividends, for example, or
yeah, I mean, dividends, I think they are the ultimate passive income.
yeah.
That's a fact. But because, for example, if you aim for a good dividend return,
Yeah.
I think 4% dividend return is doable. But obviously, because you're not generating 2% a month, like selling options, you need to have a lot more capital. So
Yeah, over
now
a
I think we're
million.
talking more about like 2 million in terms of capital just to live off dividends.
Okay. What
Like,
brought you to, yeah, go ahead.
do you also have dividend stocks? Do you hold stocks
I
that pay
used
dividends?
to. I used to. So in my registered accounts, I used to have dividends, but then I sold them when they went up. And I also sold them because I realized I could do probably more with covered calls
That's it. That's exactly it. Yeah.
instead of making 4% a year. Yes, they are appreciating, but it's still just generating me 4% in cash. I feel like I could take the capital and do covered calls, which can generate me maybe 20-30% a year.
Yeah.
Uh,
And it's cash in your account also. Like compared to portfolio value, when you have dividends, you have 4% dividend that arrive in your account, but the rest is portfolio value, and this is just fluctuating. At least when it
yeah,
comes to selling options, the cash is in your account when you
yeah,
close the position, which is a lot.
exactly.
It feels a lot better, I feel.
Absolutely, exactly. To me, that made more sense. Yeah, it matches more my personality. Yeah, because my goal is a portfolio should be there to generate income for you. Some people
Yeah.
view the portfolio, if they don't need the income, they view it as just a way to grow your wealth. A wealth
Yeah.
builder. So if it's just a wealth builder, then yeah, buying and holding tech stocks is probably the best thing. But I want to generate income. I want my money to generate money. So what's the
Yeah.
best way to generate money? With money, in my opinion, it'll be option selling,
Yeah, I mean, it makes
versus
sense.
dividends
It depends
or
on yeah, it depends on the personality of the person, I think. Like, but for sure, I think once someone really knows how to sell options, for example, really is comfortable, it almost it tears me down to say it, but it almost doesn't make sense to have dividends, and because you could make so much more selling options for actually less risk in a way, because you're going to have less volatility in the returns. If you, for example, sell wide credit space, you're going to have less volatility returns compared to someone who would hold a bag of stocks and who would go down all the way down with a crash, for example. So, in the end, I think it makes more sense. You make more returns, you have less volatility, and it's cash in your account when you close the trade.
can you tell me with Tastyworks, what's the buying power required for let's say an 80 put on Activision? Do you have it
So,
open? Yeah.
so for which expiration? The
This week.
the sixth this
Yeah.
week? Which strike do you say? 80 put?
80 put. Yeah. For
So 1300.
1300?
Yeah,
Okay. So with me it's 2100. Okay. Okay.
really.
So yours Tastyworks is a little bit better.
Yeah,
Okay.
but you see, honestly, this is we need to be careful with margin. That's why honestly, like selling naked and everything, I'm like so careful with that, because even if it's 1300, I'd rather have them telling me to need 2100 rather than 1300, because this is an invitation to trade big. This is an
To
invitation
sell
to
more.
yeah, to sell more and stuff. Like, we need to be careful with that stuff.
Yeah.
Before, it's funny because when I started trading options, I don't know about you, but I used to be like reckless in my way of trading. I used to do things now I wouldn't do them anymore, like never. I used to trade way too big, way too often, and I mean, I didn't think about the risk. Now I'm freaking out every time I'm taking a trade, because I'm always thinking about the worst case scenario. And if a crash happens, what do I do? I'm always thinking about these type of things, compared to just selling a naked put and being like, cool, there's a small buying power required. Let's do it. Let's sell 5 contracts then. I'm really careful about how do I sell options. Have you been through that thing also, where before you used to take a lot more risk and now a lot
No,
less?
no, no, no.
Fair enough.
I don't think the only thing I used to do that I don't do anymore is, but VIX was higher before. Before I used to sell naked calls on earnings, but only like, for example, the trade that I remember is, see, good thing I didn't do it on Zoom, but Netflix at some point was like at 550, and the 700 calls were like worth 50 cents, and it was like the next day expiry. So it was announcing earnings
Okay.
Thursday after hours and Friday expiry. The 700 call was worth 50 cents. Can you imagine that? So 150
Yeah.
points away.
Yeah.
50 cents. So
Yeah.
I sold 10 contracts
Yeah.
at the 700 call. So it ended up being, it expired worthless. It was, and Netflix ended up dropping. But I mean, going back, uh, if it pulled a Zoom, although that's the thing, it's unlikely that Netflix would pull a Zoom because it's not in the same situation. But imagine if it did, I would be
Yeah.
screwed, right? 10
Yeah.
times.
Yeah. Especially like you don't even need to have your strike breach to be in a loss. Like, just
The
the
increase in the,
unrealized loss
yeah.
is going to make
But
yourself go in a loss. And
it was a next day expiry, so I would not
yeah,
have time to be in a margin call or anything like that. But I
yeah,
mean, like if I'd done it on, I was actually the day where Zoom went from, like, I don't know, 300 to 450. I was looking at selling the 440 call, because Zoom actually ended up going above the last available strike that
yes,
week.
yes,
So
yes.
the if I had done that, I would have been in big trouble. So
That was bad. I remember with that trade the day before, I was thinking about selling a short strangle on Zoom, and I was like really about to hit the send button, and then I turned it into an iron condor because I was
okay,
like,
that's
you
good.
know what? Let me just sell a short iron condor because I don't trust that stock. And the next day it just went like, I mean, I was at max loss directly, like literally. That I think
Yeah,
that's one of the only times where I had been at max loss like completely, like
yeah, no
nothing
chance.
left. Like yeah, that was one of the worst trades that I ever had. Like
No way
that
to
Zoom
save it.
earnings.
Yeah, a subscriber actually messaged me, left a comment on one of my videos and said that he lost like 30,000 on that trade.
Oof.
He had several contracts. You know what the most annoying part is his strike got breached, but at the end of the week, Zoom
I
came
know,
back
yeah,
down below his strike.
yeah,
So if he had
so
done nothing,
annoying.
it would have been fine. He lost
Yeah,
30K just like that. Like, that's
it's
really
mad.
sad. That's really sad, man.
Especially seeing that it came back after. I was
Yeah,
so
that's
pissed that it
annoying.
came back
Yeah.
after. What I would have wanted is, let's go to 800 then. If I lost everything on the trade,
Yeah, so I
at
don't feel
least let
bad.
make that
Yeah.
move worth it.
Yeah.
But yeah, I mean, it's the game. Like that's why in the end, trading small. But with this type of thing, I think it's like the 0.1% occurrence that just puts you in a
But
very bad position. But
it can set you back a lot.
yeah,
So I don't know. So that's why right now I don't think I would do naked calls for earnings. Never again.
yeah. I mean,
It never
that's
happened to
as
me,
you
but
say.
it could have happened easily.
Yeah, as you say, it's the 1% occurrence that puts you in the worst position. And that's, for example, what Nassim Taleb says a lot. Like, I don't know if you know that guy, Nassim Taleb. He's he used to be an option trader and he's basically an investor now. And his way of
That's
investing in
a
the market is opposite to selling options. He's going to buy options, but only buying the one delta on the SPOs,
okay,
for
okay,
example.
okay.
And like
He's
for
going for that
five
one
years straight,
percent.
yes. And for 5 years straight, he loses every year. And in March 2020, I think he did on his fund like 3,500% return, on his fund. But obviously, because when there's a crash, he benefits from it.
Does it?
But
Yeah.
that's this type of things for him. He doesn't believe that there is money selling options because that 1% occurrence will always wipe out all the gains that you
But
had.
that's why I sell the put side, because most of the time, even like, it's rare for, if a stock drops so hard, the general direction of the stock is to go up. Like, that's the whole goal of a
Yeah,
company. There's people working in the company, working hard to boost shareholder value, and the general direction of the stock is to go up. So even if your put gets completely breached, it's just a matter of time.
yeah,
If you sold the put on a quality stock, it's just a matter of time before the stock comes back up again. So it's
yeah,
easier to roll. But a call side, if you roll a naked call, the stock, you don't know if the stock's going to come back below your strike again, ever again. So you
For
could be
real.
stuck forever. But on the put
Yeah.
side, you're not as stuck, assuming
Yeah.
you're playing a
I
quality
agree.
company.
I
So that's
agree.
why.
I had I had listened to some guys on YouTube. They have like a training channel.
Yeah, sorry, you were listening to a guy on YouTube.
They have a training channel, and basically their idea, the main idea is to bet big on your ideas. And for example, if you believe that,
If you had high
you know,
conviction,
like, yeah, like you should, for example, sell 20 contracts on it and not just trade small and sell one contract. And they were explaining like the guy was saying he was short call on AMC. So if we look at AMC, I think he was like short call the 35 strike on AMC,
yeah.
and you know, like he was betting big, as he said on his idea. And the guy said that he was losing like 10 grand a minute when the stock was going to $70 a share. You know, like I can't even imagine the mental pressure that you must go
Yeah.
through during this time. Like honestly, like people underestimate the mental pressure that you
Yeah,
can
yeah,
have when you go
exactly.
into a loss. Like I had read something that, you know, when you go into that bad of a loss, it's almost the same feeling as being you know, physically in danger. Like if someone actually wanted to hurt you. And
Yeah,
honestly, I get it. Like I feel that, like, because when you go into that bad of a loss, I mean, it didn't happen to me, but when you go into a bad loss, it's really stressing me out. You know, it's really painful. So I get it. Like,
yeah. Well, that's what I went through in March. Like I had usually I'm not a stressful guy. Usually like I'm careless. I don't care. But it affected me so much that I couldn't sleep for 2 nights. And that's when I
yeah,
realized, okay, this is not healthy. I can't handle this, and I took the loss. I bought my health basically
yeah, for real.
by confirming losses. Yeah, and I said I
But
took it as a learning lesson. It's as if I had a business and I just I lost some money in my business, and but it's a learning expense. And but what did I learn really? What I learned is, first of all, I didn't respect my Monday, Wednesday, Friday schedule. I also
mhm,
have to realize that it's a once in a lifetime event. It's not an every year event. So it just
yeah,
got unlucky, and also to have a lot of buying power available,
yeah,
and to be more like I was doing covered calls in 2019, and it was going very well. Like I think at some point I was making like $7,000 a month from the calls that I'm
nice.
collecting. So it seemed so easy. So I was just like buying 100 shares here and there. I don't care because I'm just going to sell calls. I didn't realize that the risk is you're still long 100 shares. So the
Yeah,
stock drops 30%, you're done. So that's
yeah,
what happened. So I became more picky in my stock selection afterwards,
I
and
agree.
not
That
just
that's
buy
also,
anything,
yeah.
and don't like follow the premiums, you know,
Yeah, for sure.
just
Because obviously,
because.
where there is premium, there is risk. I mean, they
Yeah,
are priced for a reason. Like, for example,
yeah,
AMC, great premiums, GME, great premiums, not for the good reasons. That's why I think it's a balance between finding good premiums and, you know, and also having healthy stocks. For example, like Gap or Dropbox, you know, they are like healthy companies overall. Like, they make money. They're obviously they're not like shady companies and everything, but that's why I like this type of stuff, because they are mid market, they have healthy stock, they are liquid, they offer a bit of best of both worlds.
I still think you should sell naked puts on them. They're so cheap. You're better off
Yeah,
selling naked puts and just rolling them if breached. You might be getting more credit that way.
yeah, but for sure I'll get more credit. But you know, I'm eager to. I mean, I'm down to reduce a bit my profit on the short term, so as to have less volatility in my
Yeah.
returns and
Okay.
less loss during a crash. It's a good combination that I found for me. Of course, I'd rather sell naked options, but you know, I mean, the risk, I'm just not fine with it. Like maybe
Okay.
I'll change.
Um, I think one of your stocks is the United States Steel, right?
Yeah, I'm careful with this one. I'm careful, to be honest.
I used to I had like I think 400 shares before the
Okay.
crash, before March 2020. I had an average price of $17 or
Okay.
$18, 400 shares. I ended up closing it at $5
Oh,
because it dropped all the way down to $5,
yeah.
and obviously there's no premium at 18. I was selling calls at like $6 and $7 strike, while my cost basis is 18.
Yeah.
And I had, see, that's a mistake I made, is I was just like buying so many, not caring, thinking that I'm invincible with covered calls.
Yeah.
But
And especially you really stole at the lowest point possible because I'm looking at it like the
yeah,
bottom was 450.
yeah,
Like
yeah.
it's really a good timing though. Like, but
But
it's crazy.
it was
No
in
one
my
could have known that he came back.
so my assumption in March, I didn't think we can go any lower because we were at 218. We went from 330 to 218 in 3 weeks. And, at some point I had a put spread at 190 on the SPY. Like, look how low my put spread was.
Yeah,
That's the advantage of my SPY put spread strategy. But my concern is that we would be stuck at 218, 220. We would be stuck at the
yeah,
bottom for a while. I didn't think we'd continue dropping. I thought we'd be flat for a while. It might take some time to come back up. I didn't think
yeah.
we'd come back up in 5 months like that, and even like
No,
all time highs afterwards. So
yeah.
that was completely ridiculous. I feel like completely, it's I got
Yeah,
played completely.
I got
If
humbled a lot during that time, like because I was like, okay, so we went down in 3 weeks, and then we came back all the way up, and actually even further up, from
yeah,
what was the last high. That was insane in terms of move, and I've got played every single time. Like I didn't think that we would not continue crashing, then coming back up, and then going even further. I mean, every time I didn't believe in it. But in the way, that's also a good lesson, like not trying to put too much into the direction and just also being a bit like, have a good strike, being at least, so if you're in trouble, you're in trouble at a good strike at a fair price and not trying to guess too much the direction because honestly, no one really knows. Like that's
yeah,
honestly what I've learned.
yeah. So what's your strategy with YouTube moving forward? Going to
But
continue 2 videos
yeah,
a week?
yeah, I think I used to do like before I used to put out a lot of videos. I used to do like one video every 2 days when I started. One video every 2 days, like fully edited and everything. I mean, that was like a ton of work. Honestly, now when I look back at it, I'm like, damn, how did I do it? Because I used to make like animations and like like
Okay.
explanations everywhere. But then I switched to more like me sharing my thoughts videos and explaining strategies, being more casual in my videos, and I actually found that it worked better. I mean, I had a better response from the audience and stuff like this.
Authenticity,
So
yeah.
yeah, I started having a better, feedback. So I continued
Engagement,
doing
yeah.
this, and so my plan is just continuing on doing this, and hopefully my channel grows. You have like a big audience also.
I have right now about 9,500 subscribers, but it's good. I'm happy. The only problem is that I've been at it for like 3 years. So my
Yeah,
channel is growing very slowly. That's the only problem, but I'm very happy still with my channel, with the community as well. Like, I've made a lot of friends that I chat with on WhatsApp.
nice,
So, and
nice.
I've learned a lot as well from my subscribers and their ideas, their trade ideas. I've adjusted my trading actually based on what subscribers have said. So no,
That's cool.
I don't regret starting YouTube. Uh,
Yeah, I think it's
although,
an amazing thing.
yeah, no, it's amazing, yeah. But I just feel like it's gonna take a while to make it full time.
Yeah,
I
yeah. I
thought it would.
mean,
I didn't think it would take this long.
yeah, it depends on the, I guess it depends on the RPM and
The top, but the topic as well of your videos. But there's like
yeah,
there's two people in the option selling niche, I guess. You watch Project Option,
yeah, of course,
or
yeah.
I think now he changed his channel,
Project Finance, yeah,
Project Finance, and in the money, I think, as
in
well.
the money, yeah,
These two are doing very well, and they're still in our
yeah,
niche. So
yeah.
there is hope. So I try to like see what they do well, to try to incorporate, but I just don't have the energy or effort to do. But
Yeah, me
their
honestly,
videos are good
yeah,
quality, and
yeah.
I know in the money puts a bit of his funny sense of humor in his video, so that helps too.
He has a. I think his personality
Yeah,
is very good. He has a
yeah,
great sense of humor. Like I like this type of sense of humor. But
yeah.
yeah,
Me
I mean,
too. Yeah.
the thing is, when I see the option trading niche on YouTube and stuff like this, I'm like, I agree with you. It's not fully developed yet. Like it's not like fully mature as a niche on YouTube compared to like I don't know, like vlogging or e-commerce or anything like
Yeah,
this.
Shopify, drop
Yeah, it's
shipping.
still quite early, so there's still room to take
Yeah,
on good seats. Probably not at the level of project finance and in the money because once they have the seats, like it's
yeah.
pretty much like
But
it. but I think it's still possible to grow.
But Project Finance, his video, his his 2 hour or 3 hour video on like everything about options, it went viral. It's like it's got over 10 million views.
Yeah,
Have you seen it? Have you come across it?
yeah.
That
I
video
watched it.
though, that see, I didn't watch that video, but because I put on YouTube before I go to sleep, so I leave it
Yeah,
running. Every time I wake up, I see it like I'm like 75% in the video. So it's always
really.
in the suggested videos. It always keeps
Yeah,
playing without me even watching it. So I think
yeah.
that I don't know what he did, but YouTube keeps pushing his video, and it's
Yeah, I mean, he killed it. Like
yeah,
it's like
that video
In the
really changed
Money
his channel,
also
man.
made In the Money made a introduction to options for beginners or something video. That's how he blew up. Also, he got
Okay.
like I don't know 2 million, 3 million views. I mean, especially like 2 million views on a normal video on a vlog channel is not that much. 2 million views on an option trading video
Yeah.
is a ton of views, and
Yeah.
on the same topic, it's also a ton of money, I guess,
Yeah.
with the RPM that goes with it. But yeah, I mean, it's they've done very well, honestly. Like, I'd love to have a channel as big as theirs.
Yeah. My goal is the same. So what's your next video topic? Do you have a topic in mind?
My next video topic will be, so I already planned on my next video. So wait, let me open my, so I have like, a notebook where I always like
Yeah,
script a
same.
bit my
Yeah.
videos.
Oh, you script your
I'm going,
videos? Okay.
yeah, I script. I used to script like almost like line by line, but it was not sustainable, and it was on top of that not natural. So, but I was learning, I was trying stuff. So, I'm going to make a video on either the wheel, so
The
the
wheel
wheel strategy or
strategy.
credit spreads. The wheel strategy
You've
or
noticed
credit
that your
spread.
wheel strategy video did well, right?
That's so true.
Yeah,
Yeah,
I've
I mean
noticed. Yeah,
that's
people
my
like the
best
wheel
performing
strategy
video.
for some reason.
Yeah, for some reason, it's a strategy that is
I
very
don't like it.
popular.
Yeah,
Like,
yeah.
I
It's
mean, I think it's
mechanical,
good.
but I don't like
Yeah,
it because it assumes that you don't care about your entry. So you start off with a
yeah,
put, an at the money put, stock keeps going higher, then you sell another at the money put. But at some point, when it gets converted into shares because the stock dropped, and then you start selling calls, but you don't know how far the stock could drop, and then you can no longer sell calls because the stock is
yeah,
too far away. So that's why I don't like the wheel strategy, because at some point you won't find premiums. It's assuming that the
yeah,
stock will always go up, and
yeah,
it assumes that you don't care about the entry as well. So
yeah.
yeah, I don't know. I'd rather do out of the money puts. At least have a better
Ex
entry. And if I'm
yeah.
reached, well, I'm not that far off.
Except if you start rolling your puts using the wheel strategy. So let's say that you sell a put, the stock is at like $100, you sell the $90 put. If it falls, instead of just being a sign, you're going to roll your $90 put to, let's say, 85, and then you're going to try after to roll it down, so you
That's what
have
I
a
do.
better
Yeah.
entry
Yeah.
if you're a sign. For me, that's the only way of trading the wheel without, because I agree with you. If you keep selling puts as the stock is going up, you obviously have you're worsening your entry at some point, because at some point the stock is going to go down, so you're going to be assigned at a super high price. So it's a bit tricky, I think. Like, selling puts just one after the other, I don't think it's a good strategy. I think we need to roll it down after that when it goes back down.
Absolutely. Yeah. Yeah. I think
Cool.
yeah.
Do you how much time do you have? I don't want to take too much time out of your day.
I guess 5 minutes is good. I have 30 minutes left for the market. I just wanted to see if there's anything I can trade.
Yeah,
Um,
I opened quite a lot of trades today, actually, which is not usual for me.
oh yeah, like
But
what?
like, so I opened today. So let me take my transaction. So today I opened a put credit spread on Gap, so the one I talked to you about.
Okay.
I also sold the put credit spread on EWZ, sorry.
Okay.
It had a good implied volatility. Yesterday, at least when I was checking the markets when they were closed, I was looking at the IV percentile, IV rank, and I was saying that EWZ had a good down move, which brought some nice volatility. So I sold the 36 puts, and I bought the 29 put.
Okay.
And otherwise, what else did I do? I sold on United States Steel Corporation the 29 call, and I bought this 35 call.
Okay. So you're playing the
And
call side.
also on FCX. Yeah, I did a lot of trades today. I took 4 trades today. I sold the 41 call on FCX and I bought the 50 call.
Okay.
Yeah, so usually I don't take like that many trades, but right now I'm not going to be able to trade that much in the next days because I'm going to have to travel. So I wanted to have like more trades on the, so at least I make money even when I'm away.
That's
I've seen
good.
like your last video where you showed your returns. You have like nice returns, huh? You collect some good premiums like on a monthly basis, like when you were showing your P&L.
Yeah.
It's decent.
Yeah. So March was good. February and March was good. January was good, but the April, May is pretty low. Here, let me share my screen. Share screen. So yeah, do you see my screen?
Yeah.
Can I move this thing?
Yeah, you had a good March.
Yeah, March was good, but since then I haven't been able to get back as high as March. June could have been a $3,000 month, but I got greedy with a few trades. I held on to it instead of closing for a profit. And now I find July was low because I feel like it was nothing wrong in July. There was no sell off. So I feel like July
Yeah.
should have been better. I had no excuse to have 1400, but I have to look at the average as well, you know. So if I look at the average, it's not bad. It's not money that you can live off, but at least at least it's something that I'm doing on purpose. I can
Yeah.
sort of control.
Yeah.
And here, if I look at my open trades, see, I played a put spread on Wayfair. I opened it last Friday because it has earnings this week, and it dropped a lot last Friday. It dropped like 4 or 5%. So I
Yeah.
did my put spread early,
Oh yeah,
215,
indeed. It
210.
fell quite a lot.
Yeah,
You went from like 280 to now
yeah,
242.
yeah. So
Yeah,
I
I might
went.
sell something actually on it.
So I did a 215, 210 put spread for this Friday. Hopefully, it stays above 215 after earnings. See, this is in my registered account, so just a bunch of covered calls here. So like the strike is 25, but my cost basis is 21. Spotify is a naked put that I was telling you about. I've got a 240 naked put, $7 that I've collected. This is a covered call on my registered account, covered call on my registered account on Corsair, covered call. So these are just covered calls because I have to do something in my registered accounts. See, this is a bad trade right now because it's worth like almost $3 right now. This put option I sold for
Yeah.
$1.50. So this was a bad entry, but this is what happens when you can't find trades and you force stuff. But this
Yeah.
was not a good
I agree.
entry because right now
I
it's
agree.
worth almost $3.
Yeah,
But
you start taking trades out of, not boredom, but because you want to place a trade, so you
yeah,
try to find
exactly.
the first thing that comes in your mind.
You start convincing yourself that this is a good trade.
Yeah, for real. For real, it's really true. You really like, oh yeah, actually it's really a good entry. Usually I would take this type of trade. Okay, let's take it. And then you regret it after.
Yeah, the next day. This is an earnings trade that went bad. Pinterest, it was at 72 before earnings dropped to like 58, and today it's at 57, I think. So this is
Yeah.
a naked put that I'm rolling. It's in the money right now, but I've collected a total of $2.78. So
You
this
trade
is
small, like, I
yeah, I
guess.
do one contract as you can see. Yeah,
Yeah, it's
one
really
contract.
small, I guess, because for the returns that you're making, you are really trading a lot, I think, no?
I honestly I don't count my trades, but I guess yeah. I right now I have about 28 open trades. Yeah, but this is across 4 accounts.
Okay.
Yeah. So and my
There's
portfolio is
a
about 130. I have 130 Canadian portfolio.
on your interview with David, there is a great comment that made me laugh a lot. There is a comment saying, David saying, you have a lot of trades on, and you saying, yeah, it just happened, man. And I laughed a lot reading that comment because it's like, yeah,
I don't
it
know how
just
it
happens,
happened. Yeah, it's easy. It's easy to add on because they accumulate, right? You
Yeah,
don't. I didn't place 28 trades in one day. It's just
yeah,
every time there's an opportunity, or every time I think there's an opportunity, I open a trade, and then
yeah,
and then when they're not closable yet, you end up holding on to them. And look, like all these ones here, the November ones. So I've got about nine trades that are just trades that were completely breached, and I rolled them all the way to November and December, just trying to forget about them. Just trying to save them and
Damn.
forget about them, just not to confirm the loss. This is a naked put that's completely breached. This is completely breached as well. The stock is trading at $20. This is
And
a
you just
covered
hold on to
call.
them and you just roll them into perpetuity,
Exactly.
basically.
They're not taking a lot of buying power out of me, and instead of confirming the loss, and it's not like I need the capital to play something else, because I'm not using all my capital anyways. So that's why
Yeah.
I don't mind just holding on to it instead of
Oh
confirming
yeah,
the
sumo.
loss
Yeah, I can see. Where did you sell? You sold the 30 strike on
on
SUMO.
Sumo. Yeah.
Yeah. Okay. Fair enough. Yeah. But it's you see, it's coming back up. Like
Oh yeah.
I mean, it was at
Slowly,
$17. Now it's at $21. Slowly but surely, you're coming back. You know.
hopefully. Yeah.
That's the thing. When you trade small and you just roll, like, and it
Yeah.
doesn't take a lot of buying power, you might as well just like roll it and see if it comes back. Like, it's probably going to come back at some point just by luck, you know, and you'll make a profit just by luck.
Yeah. Yeah. Exactly. And if you had a bad entry to begin with, it allows you to have a new entry, a better entry the next time.
Yeah, yeah,
So yeah.
yeah.
And like these were my trades last week. At a Spotify put here at 225, open for three, closed for $1.75. It ended up it could have expired worthless actually, so it could have kept the full
Mm.
$3, but I closed it too early because I started to worry about my buying power because it was taking a lot of buying power.
Oh, really? How
Yeah.
much buying power is it like for
So
Spotify?
with Quest Trade, so the stock was trading at around 225. My strike was 225. So it takes about 67.50 buying power out of me. But I already have a 240 put, right? So I had two puts on. So it's taking. So the other one was taking 8,000, and this one was taking 6,000. So I didn't want to have two puts open. So I wanted to get rid of
Right.
one of them at least.
So
And
do you
plus,
stick to like how do you
yeah.
have a percentage of buying power do you stick to? Like for example,
So what right now with VIX low, I try to keep more than 50% available.
per trade, do you have like a percentage
Oh
of
no
buying
no I
power per
don't
trade?
no no no
Because
no
yeah, I've looked. I'm usually around 4% buying power per trade.
no I don't look at per trade, no. No,
Okay.
because your true risk per trade is what you're willing to close the trade for.
Of
So
course, yeah.
your risk is not like the strike price because the stock's
Yeah,
not going
no,
to go
of
to
course.
zero. So the risk is really what you're willing, how far the stock will drop and you're willing to take the loss at. So I don't, yeah, no, I don't.
But
If you're doing spreads, then yeah, you have to think of it this way because each trade has the same impact, right? But if you're doing naked puts, I don't think every trade has to. You don't have to allocate the same percentage of buying power to every trade if you're doing naked.
yeah,
But if you're doing
but the,
spreads, yeah, it's a different game with spreads. Yeah.
yeah. I mean, I just feel like, for example, if you are, for example, I try to sell like right now the 200 puts on Spotify. I need to have $2,000 worth of buying power,
Oh yeah, that's
and
good.
like that's fine, but obviously those 2 grand, they are based on the risk that they are judging that Spotify has right now. So if that $2,000 worth of buying power doesn't is representing too much in terms of buying power per trade that I'm allowing myself to have,
What
I'm
I
not
want
going
to
to take the trade.
Okay, I want to show you something. Share screen. All right. So over here, I started logging my trades in July 2020. I was doing
Right.
here. Here I was doing credit spreads, put spreads, and call spreads. Put spreads on red days, call spreads on green days, and I would mitigate put spreads that are breached with call spreads. And as you can see, my PNL was not so high. September I actually lost money. I had a week where I lost $1,000. October
Okay.
593, and when I look back, that's when I realized that I actually did a back test of my trades to see what would have happened if I never closed my profitable trade, if I let everything go to expiry, if I let all my initial trades go to expiry, where I do not close my winning trades and I do not manage my losing trades, I would have made way more profit. So I realized my over management is what was making me lose money, and
Mm,
my call spreads, selling call spreads against breached put spreads. So in
yeah.
November, I changed my strategy. I started rolling my put spreads instead of closing them with a call spread, and I started doing more naked puts. And as you can see, the
Yeah.
PNL changed drastically.
Yeah. I mean,
So
selling when you go from spreads to naked puts or naked options in general. I mean, the results it's insane when you see how much more. If I was selling just naked options, I would make so much more money, I think now. I mean, for sure, actually, not even I think, for sure I would make so much more money. But it's always that thing. I'm always thinking about that risk, and maybe I'll find a way in the future to actually mitigate that risk in case of a crash. But
I think the best
so far,
mitigation is to have enough buying power to manage. Yeah, but
yeah.
if you start buying hedges, or like you could buy a put on the SPY, you could buy a leap put on the SPY as protection, or a leap call on the VIX for protection. But I don't know if it's a good idea.
But the thing is, an individual stock could still fall while the SPY is going up. An individual stock could still go through bad places.
Yeah, you're buying the SPY because you're assuming that you want to protect against a general market crash. Yeah, but an individual stock crash, well, if you're picking quality stocks, you should not be worried about a stock crash. Yeah, but anything's possible, but it's just unlikely.
Yeah, I mean, I don't know. When I see that, for example, March 2020 happened, I had listened to what your answer when he was asking you a question like, do you think there'll be a worse crash than 2020? And he doesn't think so. You think so? Apparently, from what I heard, you said that you would think that it's possible that we're going to experience another crash like 2020 in our lifetime. And I personally think that it's absolutely possible, if not worse. Like, there's nothing that tells us that it couldn't happen like even worse. Who knows?
Yeah.
Maybe this is going to become the new normal. Who knows? Like, it's terrifying to think about it, but who knows? If it's a bit like, apparently I mean, I wasn't even born, but like in 1987, after the crash, the puts started being skewed, and the price of puts started being more expensive compared to the price of calls. So who knows what the market can actually do and how it can adapt to new worlds. Like, maybe it's going to actually change and be the new normal. I don't hope so, but who knows? So that's why, for me, there's a bit of a duty in being really responsible for our own money, and regardless if it's selling naked option, but at least having a lot of buying power available, or selling, for example, white credit spreads like I do. But there is really a duty in being really responsible with the money that we handle, I think.
That's true. Yeah.
But yeah. Well, I mean, thank you so much for having shared your insights with me. That was really cool talking to you.
Yeah, I enjoyed the chat as well. Yeah.
And we should do that in several months, once we will have blown up our accounts, and we'll be telling each other how bad of an idea it was.
Yeah, we're gonna rely on YouTube money now.
For real.
Do you do affiliate marketing? Like, do you have referral links in your descriptions?
Yeah, I do with the Webull, and also have some Amazon links also, where I share some books that I read and some stuff like this. Yeah.
Okay. That's
good. I saw you had some also in your
description. Yeah, I have a bunch, but no one's using them. But does Tastyworks offer anything?
Yeah, they do offer a referral.
Okay, that's good.
An affiliate thing, but it's quite a lot. You need to have someone to put $2,000 in their account, so it's a qualified referral.
Okay.
Compared to with Webull, where it's only $100.
Okay.
So yeah,
that's cool. I might try that when we get Tastyworks.
Yeah, I mean, I hope you're going to have it soon. Honestly, it's definitely needed.
Okay. All right. Well, stay in touch via YouTube and comments.
Sure.
Try to watch some of my videos, okay?
I actually watched like your videos more than what I remembered, actually.
Okay.
Yeah, I watched the Tom Sosnoff interview. I also watched your returns video, and I actually watched like. I remember once, like at the very beginning, you had like commented on one of my videos when I really was starting out, and I was like, "Damn, how did he find one of my videos?" Like I was really intrigued on how you found one of my videos. But yeah.
I remember, I saw when you said like why you don't like weeklies and you prefer monthlies, and you were talking about gamma risk. Like I saw you were influenced by Tastytrade a lot.
yeah, for sure. I mean, I think like anyone who doesn't necessarily come from a professional background when it talks to investments and financial professions, you obviously learn from what is available out there, and it happens that Tastytrade is probably one of the best sources to learn options. So you can really literally see on my YouTube videos how I've grown in terms of option trading and how I changed the strategies that I've been using and how I've got influenced by Tastytrade, how I went away from Tastytrade. I like it also because it's, you know, it's a bit of a, I document everything and I like it.
Okay.
But yeah, nice talking to you, and
Yeah.
hopefully we'll do that maybe in several months again.
Yeah, and good luck with your trading.
You too.
All right.
Bye bye.
Bye. Bye.